Greetings, traders. If high risk and high probability are your favorite things, then you might like Strangles. We're also going to look at an alternative trade, so stick with me. I hope you'll enjoy this one. It'll take a lot of that risk off. But speaking of risk, it's CCL, or Carnival Cruise Line, and pandemic world has me a little about cruises and their potential right now. So, Carnival Cruise Line has an IV rank of 42 and a nice liquidity rank of 4 out of 4, but we're going to be in the same weeklies, pardon me, same weekly expiration as we were in yesterday's McDonald's trade, which worked out slightly well for us yesterday. Small gain. Hey, a gain is a gain, right? So, thank you for joining me today, this Wednesday, August 18th, 2021. I have to say, it'll probably be my last video for the week. Got a little bit of a family thing going on. We got a hospital visit tomorrow, and I'll probably be out again on a Friday. So, if I can do it on Friday, I certainly will. But thank you for watching. I do appreciate when you watch these videos to the end, and leave a like if you like it. You can always leave the dislike if you disliked it too, but if you do, would you leave me a comment as to what you think I could do better? All right, let's get started. Hi, everybody. My name is Neil. I'm down in the bottom left corner now, nice and small, because what's important is on the screen. We're inside of Thinkorswim's simulated trading, or paper money. You can see we've got our little portfolio built here. Let's take a quick look at the charts. Type in CCL here, and you can see, boy, we've had a down run, and then sort of been going pretty sideways. We're nearish that bottom band, so I am slightly bullish, which is why our alternative trade will be slightly bullish. All right, so let's go ahead and build the trade as it was sent to us today from Tasty Trade. And by the way, like I said, I'm going to be out probably tomorrow and Friday. If you're relying on me to bring you your cherry bombs, first off, I'm flattered. Thank you. But I won't be able to get you the videos at least tomorrow. So you're going to want to go and sign up for Tasty Trade's Cherry Bomb email list. It's in the description. Go ahead and click the link. Sign up. It's only a bit.ly link, so I know that it gets clicked every once in a while. Trust me, it doesn't happen often. But if you sign up, you'll get emails from them with these same trade ideas. These videos just explore those trade ideas and alternatives. It gives you a place to come ask questions, compare how you're performing versus my performance. We could talk shop. Sounds good, all right? Cool, let's go. So, analyze trade, add simulated trade. We're going to be in the September 24th weeklies, which is 37 days to expiration as of today, the 18th of August. We're going to be selling the 18 put and selling the 26 call for a net credit of 76 cents. So that is the maximum profit. Not a lot of profit, but high probability. Remember, selling options is like being the insurance company, right? We pretty much send payments regularly to insurance companies. They get to keep that money because we don't get in an accident, right? That's the idea here. If you got into an accident, you're glad you had the insurance though, right? So let's go take a look at the risk profile to understand our probabilities. Set the date in the top right corner here to the same date you see in the bottom left corner in turquoise. That's 9/25. You can see that our break-evens are actually outside the expected move, which is nice, which gives us a 71% probability of ending up between what I like to call the goalposts, right? But remember, because these are naked options, you have all of the risk to the downside to 0, so it is limited, it is defined to some point, right? But to the upside, there's unlimited risk. So you have to monitor these trades. You might want to set yourself an alert for where you hit 2 to 3 times of the maximum of the credit received. So let's say at $140, you might want to set your, where are we here? So that's at that's it right now. We're looking at expiration. $140 of maximum loss would be here. So at 28, let's say 28. You set an alert for the if Carnival Cruise Lines hits 28, it's time to get out, right? So that's if you sat there. If you wanted to do it like today, right? If Carnival jumped today, you could set yourself an alert for 26.50, right? That's the way to keep yourself under control with these defined risk ones. And now if you're doing this in an IRA, okay, you can't do it. Yeah, right? Unless you're approved for it, and some brokerages allow that. Let's go ahead and right-click this trade, choose confirm and send. I tick this little box here so you can see it. $76 of maximum profit. Infinite max loss is potential here, but that's highly unlikely, right? So let's go ahead and throw this one into the margin account and see what happens. Now let's go back to the full screen mode and build out an alternative that's IRA friendly. Add simulated trades. What we're going to do here is build a broken wing butterfly, not one that we do often here. So that's cool. Oops, didn't mean, oh, I guess that was, serendipity right there. Let's take a quick look at the market conditions. It looks like we're having another down day, not a huge, big down day, but we see all of the US indices, NASDAQ is unchanged. But we've got S&Ps, Russell, and Dow. They're down a smidge, right? So who knows if it's going to stay that way. I wanted to click on this. There we go. Let me move this out of the way. Now we're back. What we're looking at doing here is, remember, a butterfly is neutral. We're going to make it a broken wing by extending the width of one of the sides. So we're going to end up, we're going to buy the 20 call. We're going to sell 2 of these. Now, this is going to be a little different. Honestly, I don't want to link them. Yeah. How do you do it in Thinkorswim? Let's see here. Butterfly. Are you going to let me adjust the quantity? And the strikes? 20, 22. Let's try this. Can I adjust the strikes? Yes, here we go. I want my long call, or short. I want to flip it. Come on. There we go. I want to buy the 20, sell the 22, 2 of them, awesome, and then buy the 23. There it is. So in this case here, it's saying we're looking at a debit of 79 cents. That's the most that we could lose. Yeah, that's great. So with that, now we figured out how to do that in Thinkorswim. See how I did that real fast? Whoops. All right, let's go to the risk profile and take a look at our probabilities here. So here's our risk profile. The date is still the same date. Let's set that break even by clicking over here. You can't see the menu show up. I apologize. It does say what set slices. That's what I want to do. I'm going to choose to break even, and I'm going to choose the expiration date. That moves my break even slice right to where the turquoise line crosses the 0 axis. And I'm looking at a 57% probability of ending up on or to the right of this gold price slice. Now, I compare that to what I see at Tastyworks. Tastyworks gives me a 59% probability of that happening. But the nice thing is, there's 0 risk to the upside and only $79 of risk to the downside. So this is a much more IRA-friendly trade. And here we're looking at should it end up, like we said, we are kind of neutral here. If it ends up anywhere at the sweet spot, we could make $120 versus the 70, whatever it was that we were before, 77-ish. All right. So that is the alternative trade we're going to go with today. I'm going to right-click this trade, choose Confirm and Send, click this little button again, and you can see here that we can make a maximum profit of $121 with a risk of $79. We're going to throw that in the IRA and see what happens. Which trade do you like? Which trade would you do? Would you do a different trade? I'd love to hear from you in the comments, and thank you so much for watching to this point in the video. Big thumbs up to you. If you feel I've earned one, there is that button. You can hit it. If you haven't yet subscribed, I would love and appreciate that subscription. And don't forget to also subscribe to that Tasty Trade email. Check the description. And yeah, hey, I'm not going to see you tomorrow. We'll see you about Friday. Until I see you, I hope the market works in your favor. May the market be with you. Until then, friends, take care.